Hi, everyone. It's Christine Kopr, VP of Sales with Sotheby's International Realty Canada in Vancouver. Okay, today's video is all about what happened between April and May, last month's results in terms of our real estate market. We're going to get right into it. Okay, so for those of you that follow me, you know, I go through this every month, and I think it's really important, particularly as we're starting to face some changes. As you know, we recently had a rate increase here in June. It was about 50 basis points, so 0.5% increase in interest rates in June. We also had one in April and a 1/4 point increase earlier this year. So the Bank of Canada has increased prime rate or the benchmark rate by 1.25% since the beginning of the year. So that has some impact on the market. We are anticipating another 50 basis point increase in July. July 13th is the next day that the Bank of Canada is meeting. Based on this last weekend's news, there was very high inflation coming out of the US and Canada and extremely low unemployment. And there has been talk that perhaps we might even see a 0.75% increase in July. So that is something that we want to keep our eyes on. Now, let's see how the market has fared since this has all begun. So Real Estate Board of Greater Vancouver covers from Whistler all the way up to Maple Ridge Mission. So please remember that this is an overall picture. If you want to get specific on your market, your product type, please contact me and we'll go through this specifically for your market. So sales, we had 2,918 sales in the month of May. That's down 32% year over year. But remember, May of last year was one of the most historic sales of all time. Highest on record is what we saw last year in sales for the entire year as well as the spring. So we're down 32% year over year, and we're down 10% month over month in terms of sales, the amount of properties that are purchased and sold. Okay, new listings, 6,377 new listings came on the market. That's down 10.5% year over year. So we have less listings than last year by 10%, or new listings that came on in the month of May, I should say. And that's also up. So we had more listings from April to May by 4.5%. Active listings, the total amount of inventory available for sale right now on our real estate board. We have 10,010 active listings on the market. That's down 9% year over year. So we have less listings than we did last year when we had super high sales. Sales are starting to moderate a little bit. Okay. Now, the active listings, so the total amount of inventory on the market is up 14% month over month. And as you have heard, inventory has been one of the main drivers in the prices increasing. The sales have been very, very, very strong, and the available amount of listings have been low relative to the amount of sales activity. And so we're starting to see a bit of supply increase, which is good to help moderate our real estate market because it has been flying way off the handle. Okay. Now, this leaves us at 3.4 months of inventory, and between 4 and 6 months of inventory, 4 and 6 is a balanced market. Prices go either near or there. There's enough buyers and enough listings to satiate the market, and prices remain relatively flat, and no one is in favor. 6 months and above of inventory, so more than 6 months of supply, is considered a buyer's market. There's more inventory than there is demand, and so there's more inventory creating downward pressure on prices. 4 months and below, which is where we're at, is considered a seller's market. There's just not enough inventory to satiate the demand, and therefore there's upward pressure on prices because more buyers are trying to fight over the one home available for sale, and they're willing to pay more to get the deal. So we have been in seller's market territory, as you can see, below 4 months of inventory for a very long time. Now, price. This is new, okay? We have had our first price decline in the benchmark price. Benchmark price came in at 1.261 in the month of May. That's up 15% year over year. So the benchmark is up 15% year over year, and it's down 0.3% month over month. It's very negligible. It's a small percentage, but it is a reverse to the trend of what we have been seeing. And this is something we're going to keep our eyes on. Historically, We're going to take a look back and see what's happened in the last cycle, but here you can see we're starting to see our first, bit of a correction happening in the marketplace. Well, we want to see what happens in the future months. So we're going to keep our eyes on this and see how we're doing. So far in June, we've had about 1,000 sales. So if the sales continue on, we're going to probably see about 2,000 sales or slightly more in the month of June. We do have a lot of buyers out there with great rate holds as these expire, because some of the interest rate increases have happened quite rapidly. We're going to see what happens in the marketplace moving forward. Now, looking back at 2018, we reviewed this in my last video. So if you want to see it again, 2018 was when we first introduced the stress test that all of a sudden automatically made all interest rates basically be 2% higher, because you had to qualify 2% higher than what was actually being given to you by the bank. Now, that was in January. And of course, we have about 120 days of rate holds and people qualifying under the new regime. And then things starting to take place. And it took, I remember about May is when things started, you could feel it in the market shifting. But of course, all of these statistical data points are a little bit of lagging indicators. And you can see that once, June and July came along, the sales started to trend down throughout the year. And we actually started getting sales that were below 2,000 sales a month. And the inventory started to increase. Our months of inventory went from here, about 4 months and below by seller's market, and starting to trend into more of a seller's market, reaching at the end of the year with 10 months of inventory, putting downward pressure on prices. You can see the prices then start to decrease. And as we went into 2019, still sales were still a little bit on the weaker side, below the average, the 10-year average. Listings peaked out here in June, and months of inventory were quite high, but started to come down. Prices were still getting negatively impacted. They were coming off because we still had this high months of inventory relative to the sales. But as they started to pick up, the market started to adjust to the new realities. Things started to come back and prices started appreciating. Then into 2020, we had COVID. And I remember even before COVID, the market was already on fire. It started to balance itself out. The new realities set in, and we started to get into low months of inventory, so not enough supply. But here was the month of COVID. We went to lockdown March 16th. I remember because I sold a property the day before, or that day, with multiple offers, 100 people through my open house. It was pretty spectacular. And then we had lockdowns, and then the market didn't know what to do. You can see the market just stopped. Sales came down, inventory came up for that month, and it showed in some price decreases in those couple months. There were some amazing buying opportunities. And then Canada came in and dropped the interest rates by 1.5% to stimulate the economy throughout the remainder of the year. And then you could see that from there on, the sales were quite elevated. They were already trending up, but then they were quite elevated, and inventory started to come down. Months of inventory started to come down, and we were purely in seller's market territory with prices rising. And the same trend continued on through 2021. Very strong sales throughout the year, over 2,000 per month. New listings, not a ton coming on the market, and active listings were quite low. You could see, we're about here right now. But they started trending down. There was just not that much inventory available for the amount of demand. And you can see that reflected in months of inventory and the strong price growth. So here we are in 2022. We still have quite a strong demand. Listings have been coming on, albeit moderately. Active listings are up a little bit higher month over month. This is what this is reflecting here. But we're getting into a more neutral territory. So what we're going to keep an eye out on is what's going to happen next with the policies. And of course, policy can change at any time. So nobody has a crystal ball as to what's going to happen. We are starting to see some softness. We have seen some prices already come off, different product. We've seen some home sell for $100,000 differences depending on the marketplace from the peak of the market, which was February, March. And now things are starting to moderate as these interest rate increases are starting to impact buyers and their affordability, and shifts in the marketplace. We still see multiple offers. Sometimes we don't. Actually, there's less multiple offers, but I'd say less subject-free offers. The right properties marketed the right price are still going to get the action. So you have to be prepared. But some properties have offer dates and there is no bid. So it's a very interesting time. I welcome the opportunity to speak with you one-on-one to talk about your specific market and what's happening there and your specific situation. Different strategies here, depending if you're going to be a seller or a buyer. And I'd love to connect with you to share some of those details. With that, I wish you a great day and I look forward to hearing from you soon.